Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of IWM. That's the Russell 2000 ETF. And as I do each and every week, I've left my lines on the chart from last week's report to see how the targets worked out. And I think it's safe to say that I was about 4 days early on my forecast of a bounce. Last week, I drew this line in place after the previous week's forecast was to the downside. And what I'm going to do, because the pivot started actually yesterday, although that volume is pretty weak, I do believe that next week we'll get up to the 185.98 level, which, by the way, happens to match up with this blue line, which is the 20-period moving average. In addition to that moving average, we have this horizontal line, which was the support level that was broken late April. And this former support will most likely act as resistance here. So if you're long the market, you still have to use good risk management strategy, because the most that I would look for next week is a rally up to that, and then we could see a possible lower low as we enter into June. So be really careful. I have not called an end to the bear market. We're in full force. And if you go back a couple of weeks and listen to my weekly market report, you'll find that I broke up the bear market and how it works in stages. There's 3 stages to a bear market, and we're just getting warmed up into stage 1 or phase 1 of the bear market. So this is where we're going to most likely see resistance. To reiterate, again, for the short-term traders, my short-term target is the same as it was last week at 185.98, and I'm just going to keep that right there. Now, if I move on over to the Qs, the tech sector got hit pretty hard. Apple's getting hit, a lot of tech stocks right across the board, Microsoft and such. Again, the forecast for the bounce was early. We started to see that yesterday instead of Monday. I'm keeping this line in place as well as my target 317.17. Same story. We had a former support level here that briefly held here. It broke here, and now guess what? It matches right up with that 20-period moving average as well. So once we get up to that level, it's very important that you keep an eye on the volume, because if the volume continues to drop as the prices continue to rally, that's a sign of a weak rally, or the sign that the buyers are losing some of that momentum. I think what we saw today right across the board towards the end of yesterday and even the end of today was mostly short covering and to the weekend. And I don't know of many short traders right now that are willing to hold a short position over the weekend. So closing that makes a lot of sense for those folks as they move to cash. So that is the QQQ. Now, if we look at the diamonds, this was a little bit more of a dramatic sell-off. I guess you could say it did not even hold that support level. I was expecting a bounce off of that support. Now that it's down below support, I'm going to have to adjust that target, because now the target is the role reversal resistance. Remember, repeating over and over, I do that a lot because repetition is the best teacher. Former support, once broken, turns to resistance over and over again. We see that throughout the markets, and it works the other way as well. Former resistance, once broken, turns to support, as we can see back here. See, we had this resistance, it broke, it held support, rallied, and then sold off. All of our members are doing very well. I'm putting out an expiration week alert to all those folks tomorrow. I will be recording over the weekend so that everyone is prepared for Monday and knowing what to do with their positions as we approach expiration Friday. So that is the diamonds. Let's move right on over to SPY. This is the S&P 500 ETF. That did not bounce at all, just like the diamonds, but the pivot point is forming. I'm going to move this down just a little bit, and what I'm going to do is move that horizontal to the moving average. I'm going to put that right around 418 to be exact. That's 417.52. I expect this rally to go up, test that, and then revert back to resistance. So again, the sellers are not done with this market. We're watching what's happening with the crypto/Bitcoin market. I'll get to that in a minute. Lots of damage there. There's more of a carnage there. A lot of people losing money, but I do believe there's some opportunity. I will be talking about ETH here in a little bit after I look at the VIX. But this is, again, all short-term bounces. I call those bear market rallies. And that's about it. If you're still stuck in buy and hold mode, I would really rethink that plan and focus more on risk management and cash available, because remember, cash on the way down becomes opportunity for the times when we finally do hit a bottom. All right, now let's talk a little bit about the VIX. It did not hit my target yet. We're very close to hitting that target of 27.94. We're about $1 away from that. I do think we will hit that target next week and maybe even go just a tad lower on that. In fact, let me just, now that we're there, let me just move that and make it one line. Because if you look down below from where I'm drawing right here, there is another role reversal. Now remember, for the most part, the VIX is inversely related to the S&P. So if we see role reversal resistance on the S&P, we're going to see role reversal support. Again, repeating, that's where resistance broken turns to support here, and I think it will hold again as support here. I've left my cycle lines on the charts for the VIX. Why? Because I'm going to be repeating this cycle when we look at Ethereum. Look at the last year here. You'll see that every single time the VIX got to that cycle low, it rallied. In other words, if you had bought the VIX on each one of those cycle lows, you would have made money. Look where we're approaching right here. Look how close that is to where I think my target's going to be. See? Now, in addition to that, it actually gets better for those that are looking to buy the VIX, is that we have a gap above the market right there. I'm going to expand that for you so you can see. This gap right here is open. And I've said it before. I've said it many times before, in fact. I'll say it again. You have to understand that the VIX is not a stock. It's an oscillating index. And I've had some comments about that. Oh, yeah, great call. The VIX is going to fill the gap. Well, it's an oscillator. We know that. But what's happening now is that once this market pulls back to the support level here, this target could act directly with the pivotal shift to the downside in the S&P, like I'm forecasting longer term. So that gap is extremely important, and it's one that even long position holders or bullish traders need to focus on, because the further the VIX drops, the higher the S&P will most likely go, but then the snap back to that gap is going to be something to see. And again, keep your eye on that. Now, it's taking one step back and looking at this. My longer term target, I have not moved that. Once we start breaking out of these highs, this VIX is in a trading channel. Once we break out of this high right here, my next big target that I've kept in place is 41.88 from that line, and I drew a horizontal line. I'm keeping that 41.88 target in place right there. Now let's look at ETH, ticker symbol ETHE, and there you have it. We have a gap above the market. We have a dramatic sell-off. This one went from 30, again, all the way down to around 13 here. And I want to break this down for you because this is really important. I'm going to take it with the daily chart first. For those of you that trade cryptos, this may very well apply to the rest of the crypto market. If you follow along with my trading checklist, I always start looking at the candle. This is a pivot point. We had a long stretch of red right here. We had 6 red candles in a row. We finally have a green. It is an official pivot point. We have a higher high and a higher low right here. There's a gap above the market that will act as a price magnet. There's a wide divergence from this moving average. It's known as the rubber band effect. You see that? When it pulls far away from that, it generally snaps back to it. Look down below. There's a drop in volume as we're hitting these lows. That's telling us the sellers are slowing down. That means the buyers are starting to move in. The stochastics down here is about to cross with a buy signal. The CCI is about to cross with a buy signal as soon as it goes over that green line. And all signs are looking bullish right there for ETHE on the daily chart. But that's not what I want to focus on right here. I want to look at the weekly chart. Look at this. Remember these cycle lines that I brought up for the VIX? Well, you could do the same thing. I don't know what platform you're using, but this is a thinkorswim platform. I'm using cycle brackets. For those that go to stockcharts.com, there's a cycle finder and buried in there somewhere in one of the links. But what you want to look for here are the lows. A cycle is measured from low to low. You see this? From low to low. Now, if you look at what's happening right here, I'll take my drawing tool out. In the past 3 years, had you bought on any one of these cycle lows, any one of them, you would have made money. Look where we are right now. We're exactly at a cycle low. So, although ETH does not have a whole lot of history to it so far, that track record is 100% accurate. And we're right at that cycle low. That's number one on the weekly chart. Number two, you're right at this point of support that if we are able to break out, and I think we will, and I'll show you why in a moment. If we break out of that low, can make that a little bit lower, right on the lows. If we break out of that low, then this could very well act as support again. Now, zooming in just a tad more, look at the weekly chart. We have a gap above the market right there. You see that? The cycle lines didn't match up with my expansion, but that is a gap. Let me use my magnifying tool for that. See that gap? Now again, going back in history, if you look at the gaps on the weekly chart on Ethereum here, 100% of the gaps have filled, even to the downside. Here's one that went gap down, it filled the gap. Here's a gap up, it filled the gap. Where's another gap? We have an open gap here, we have an open gap here, with the cycles on a low and with all the bullish signals coming in on a daily chart. Now, I do not have a position in Ethereum. I have some positions, light positions in crypto and Cardano and such, but I'm not a big investor. I just trade in and out of it. Now, if you decide to buy this anywhere in this area right here, you have to manage risk. You have to put your stop somewhere below these lows. You give it room to breathe, but you can't hold on and say, okay, I'm down a little bit. Let me see what happens tomorrow. No, you have to get in there and manage risk, just like any of the other positions that you might hold. That's it for ETH and the general markets, but I have one more I want to talk about, and that's silver. Many of you know I hold a big position in SLV and physical silver. This is a weekly chart for SLV, and it is right at a key support level on the weekly chart. And look at the daily chart. We have this beautiful green candle here today. Oscillators are going up, gaps above the market. It's in a beautiful trading channel, just like this. Now, I was talking to one of our clients named Nick, who told me something about himself that I found very interesting. He is a numismatist, and he was telling me about silver, and he said, did you hear about what the mint is doing? I said, no. He told me about an article out there, and I dug a little bit deeper and found that the U.S. Mint, check this out. I'll put a link to this article in the description box. The U.S. Mint is not going to be stamping any of the Morgan dollars, peace dollars. Why? They're running out of silver. There's silver shortages here. See this? Now, with that said, if you go back and look at the silver chart, you have to also understand that the silver miners are actually pulling silver out of the ground at a higher price than where you can buy it in the open market right now. And with the cost of fuel going up, which it is, especially diesel, check out the diesel fuel here according to AAA. Diesel and all the other fuel grades are on the rise. These are all uptrends right here. As the cost of diesel, which by the way is one of the biggest expenses for miners, as that continues to rise, they're going to start cutting production because it becomes too expensive to pull it out of the ground. I mean, let's face it, what are they going to do? Pull it out of the ground at 23 and sell it in the open market at 20? They'll pull back on production just like the oil drillers in Texas pulled back when prices dropped too far as well. So this is what we have in silver. Keep your eye on the charts. I still love it. I buy the physical silver. I use Provident metals. I'll put that link in the description box as well. And with that, I just have one last favor. If you could, please like and subscribe and share and click the notification bell. You know what to do there. What happens is we've had a great response. And as a result of your response and your participation and your questions, we're driving this report into the algorithms and more people are finding it on the menu. So again, thanks to you. That is happening. Each and every one of us could act as ambassadors to the technical analysis charts here. And it's a lot of fun when you're following the charts. So have a great weekend, and we'll talk to you soon. So long.